Welcome back from that break. Now, talking about the CBN MPC meeting currently going on right now in the FCT capital, the CBN quarter. I have Chinonyerem Obunma from Alpha10 Investment Limited to help us analyze. A lot of projections have gone out, Chinonyerem. But for you, let's start with the current 27% that was cut some few months back. What do you make of it?
Okay, so in September, we saw after the CBN MPC meeting that the cut rate is 27%. I think for me, I have two perspectives on this. On the first hand, we can see the CBN moving away from their very tight monetary policy stance. We are moving to a gradual easing of our rates. The CBN is trying to promote stability, even while encouraging growth as well. But on the second hand, looking at the current inflation rate, the current interest rate environment, a 27% MPR is still high at the moment. Yes, we know how this translates into businesses borrowing costs, banks keeping the lending rate high because the MPR is still high. Yeah, so for me, I feel like while there was an easing, it's still a cautious stance. It was helpful, but it hasn't really addressed the real problems in the economy yet, given that the rates are still at this high level currently.
But for the CBN, the reason why they brought down the rate from 27.50 was as a result of the easing within the inflation rate. They also made mention of the energy sector and the price of petroleum products and the rest of them. And from you now, you are saying that it has not really helped, even though we are still having a cut. But for many businesses out there that we're watching, what have been the impact of this rate, the one they had currently, the 27%?
Okay, so I think I'll have to bring in the asymmetric corridor into this. Yes, so we know the new rate 250 over 250.
Exactly.
Yes, and then when the banks borrow money from the CBN, you're paying the MPR plus 250 bips.
Exactly.
So that's like a 29% thereabouts. Yes, and if the bank is lending to their customer, it's going to be above 30%. And which business can pay 30% annum, 30% interest rate per annum on the money that you borrowed? It's almost like 50%. So a lot of businesses are not encouraged to borrow money yet. Yeah, because of that 27% MPR that we still have. Yeah. So businesses still face high borrowing costs. You can see that even though there's surplus liquidity, you saw that the CRR also reduced to 45% from 50%. Yeah. Businesses are not incentivized to borrow because of that high rate. And when money doesn't circulate around the system, we already know, even though our PMI too has been above 50%, but there are some sectors that will not have access to this money, such as the SMEs, small businesses. If a small business is taking 30% on their loan, I mean, how do they expect to grow, their expenses and all of that? Yeah, so it is not very attractive for businesses to borrow.
But let's quickly take a look at what many are saying, particularly people who believe that CBN must go dovish at this point in time. And projections have gone out. People are saying 26%, some are even saying 26.50. You could hear our guest that just left, Dr. was saying 26. But there are reasons why they are saying that. One of the reasons is that we are having a easing macroeconomic environment. Can you help us understand that easing macroeconomic environment that could lead to CBN, taking the 26% cut?
Okay, so I think the first thing we'll look at is the GDP. Yes, GDP has been increasing. I mean, in the last quarter, we saw over 4% compared to 3% and 2% that we used to see. And then inflation as well. Inflation is at 16%. I mean, interest rates generally in the market, in the capital market, you have rates at 15, 16%. And MPR is still at 27%. I mean, you can't match it together. Yes. Because now, before this MPR, the last MPC meeting, the CBN gave off dovish signals that, we might cut rates at the next meeting. And we saw the way the rate in the market dropped quickly. Yes. And with the rates dropping quickly, there was an expectation that the CBN will also cut rate as much, even though you cannot match it because of the gap here, but to meet that level. So when you have MPR at 27%, you have inflation at 16%, you have rates in the market at 16%, I mean, the gap is too wide. People are even expecting a 200 bips cut, as it is, yes. They're expecting 25%, and from there, as inflation decreases, the rate will get to that level.
But there are some who believe that CBN must remain on its guard. That people still believe that, don't go down below that 27%, because, no, the Christmas period is coming.
End of year
Exactly.
position,
So there are people who still believe that, though, don't cut down below 27. And they have their reasons. Even though many of us, or many people who believe that they should cut down, they are citing the reserve, they are citing Naira exchange rate. They're also citing that the stock market will benefit when it comes that way. But what do you make of people who are on the other side of the table saying, no, don't cut, don't cut?
Okay, so I think I'll just take each of them individually. Yeah. So you said the stock market, you said Naira and external reserve. Yes. Okay, so we've been seeing a steady appreciation in Naira. You know, we know where it opened at the beginning of the year and where it is currently. Yes. And Naira appreciating is good for any economy. I mean, yes, really good. Stronger Naira means that, you know, our inflation level, because Nigeria's biggest inflation problem is cost push inflation. The inflation of manufacturing inputs, you know, food as a result of the inputs needed, even imports, yes, and all of that. So when the Naira is appreciating, they feel like this inflation rate, you know, would not go as much. And that's why some people are pushing. But then, like you said, the end of year, typically November, December, you know, food prices rise. Yeah, seasonal demand, there's a lot of demand, you know, and sellers tend to increase to meet. Yeah. So I understand the people who are saying, oh, the CBN should hold currently because they don't want the CBN to make a move, you know, and we see inflation going back up. Yeah. And following the CBN's pattern, when inflation is going up, I mean, they're not even going to say, oh, let me hold and watch. The rate is going back up again. So people are very cautious now. They say, okay, just hold this rate for this period. You can continue your easing, January meeting, February meeting, but let us pass the December phase. Same thing as the reserves as well. So the fact that the reserves have gone up does not necessarily mean that the CBN will cut rates. So the reserves have several components. We have the gross, we have the net.
Exactly.
So the MPC is looking at it like, oh, okay, how much do I have in my net? How much do I have in my gross? You know, this money that I have in my reserve, is it for short-term liabilities? Is it longer term? You know, so there are a lot of factors. So this considerations also supports the people who say, oh, the CBN should be very cautious when cutting their rates. And there was the last one that you mentioned.
Talking about the stock market. Which
yes, the stock market, yes. This also links to the borrowing cost as well, yes. So when rates are eased, businesses can borrow from the bank. And when a business borrows from the bank, you know, puts it into their activities, either manufacturing, lending, whatsoever, operations begin, you know, employment increases as well, they have more capacity. And if I'm trying to invest and I see that, oh, a company has been able to borrow money and put into their business, it has multiplied. Their balances have become stronger, they have more assets, they're able to pay off the loan, they have less liabilities. It's a boost for investors as well. It means that money is circulating in the economy, you know. There is potential for growth as well. Yes, businesses don't face high costs that drag down their profits. Yes, so in the long term, you know, it boosts investors' confidence, you know, it boosts interest in the stock markets. And
well, there's a lot international dimension to it.
Yeah.
The geopolitical tension, and in this regard, let's quickly look at the U.S. Federal Reserve. They have done their own cut in October, and many are still expecting maybe this November, December they will still do a cut. And many are pointing to the fact that if U.S. Federal Reserve can cut, who is CBN that cannot cut? If banks in Europe are cutting, who is CBN that cannot cut? But this is one leg of it. But the other guys who are also now, no, don't just look at U.S. Federal Reserve. Look at the geopolitical tension, the crude oil price that is not giving anybody any joy at any point in time as we speak right now. Also look at that. But what's your take on that?
Yeah, so I think that, well, the U.S. and Nigeria are very different, you know, in terms of operations, even governance. Yes, so I know that globally it's a like rate cut season everywhere. Either you're cutting or you're holding. I mean, we saw China holding, we saw the US cutting, the EU, the UK. Yeah, but for Nigeria, we won't take that same route. Yes, of course, our macroeconomic factors are the indices. They look great, you know. We could even say, oh yes, the CBN will do a 50 bips cut at this next meeting. But we should not allow the fact that other countries are cutting their rates, you know, to make us cut our own rates without looking at the macroeconomic factors. Yes. So, and we all know how Nigeria is very susceptible to global tensions.
Exactly.
I mean, Trump just said, oh, Nigeria is a country of particular concern, and we saw the way investors pulled out from the stock market. The market crashed, you know, our Euro bonds, the yields went up because the price was going down. Yeah, so given that we have a very volatile economy, yeah, so we cannot just replicate what other developed economies are doing as well. Yeah, we need like more background, more intention, more checking and all of that, before we make decisions.
With our discussion now, let's now contextualize in the aspect of the stock market.
Okay.
You have seen the last 1 week or about 2 weeks, a very bearish outing, a loss of over 7 trillion naira. What do you think is, making market to look too bearish at this point in time? Because in November, there was a projection at go ahead that November will be a super harvest on Nigerian stock. But here we are. It's like everybody's running a loss. Well, let's have your take on that.
Okay. So I think I would start from the year, beginning of the year. Yeah. So as at September, October, I think year to date, the NGX ASI had like 45% return on stocks. The market was bullish. Some stocks were giving 700%, 600%. Yeah. But then there were things that happened in September and October that affected the market in November. The most common one now, the market rally.
Exactly.
So for people who do investments, brokers, strong investors, they know that when the market rallies, there's only a point that it gets to before it pushes back. Yeah, so there was a lot of profit taking. People were selling off to close profits before the market would turn on them. And then we have Trump coming in with his country of particular concern. Yes, there's also the global risk of, for international investors, September and October are like risk off months for them.
Exactly.
So they pull off their assets from risky countries, and Nigeria currently is one of them. That's why we offer such a high premium for our Euro bonds, our stocks, yes, to cover for that risk. Yeah. So when those things happened as well, and then there was the tax, the CGT, yes. Yeah, so there was a lot of misconception about it. Yeah, some people were saying that, once you invest, they're taking your money. Yes, it's going to start now. But it was not true. Yeah, so that also made people pull out. We had institutional investors selling off large volumes that moved the markets. We had foreign investors, pulling out of the market. But then when some clarity was made about it, we saw some calm return to the market. Yeah, there was a day that the market did like 2.something%.
Exactly.
Yes. And then I think also the corporate earnings season, we know that September is the end of Q3. And as at October 31st, that's when all earnings reports for Q3 should come out, according to the mandates by second NGX. Yes. And then some companies rather, did not really post earnings as expected. We have like MTN and Airtel that had like below expectations, they performed below expectations. So we saw investors also selling off in those stocks as well. Yeah. So those were some of the reasons, that
before I let you go, because time is almost up now.
Yeah.
We saw Dangote Sugar Refinery coming up with their commercial paper last week. Out of the 500 billion, they brought out 100 billion. And we saw the push, the rush for it. Although the 400 billion is still there to be taken. But what do you make of that commercial paper? Because many companies are also, maybe they may also take advantage of that.
Okay, yeah, so we've been seeing a lot of commercial paper issuance recently. Like I said, the interest rate environment is very low. So companies are trying to get as much money as they can, by paying low interest rates. Yes. Now, for a company like Dangote appeals to investors from all over the investors classes. Yes. So first of all, a lot of people are like, Dangote, very solid. Investing with Dangote is less risky compared to investing with other people. So they lock in their funds. And the rates that Dangote is offering compared to the rates you get in the market, yes, it's higher.
Exactly.
And then Dangote Sugar, as other Dangote businesses as well, is some kind of halal business.
Exactly.
Yes, so we see a lot of Muslim halal investors as well trying to
get
buy. Yes, we have a lot of institutional investors because Dangote is a strong name, it's a household name, it's a countrywide name. Everybody knows.
And one analyst told me that everybody consumes sugar on daily.
Exactly. So there is
people taking their money there. But in less than 30 seconds, tomorrow by 2 p.m., CBN will announce either a rate cut or surprisingly they could even jack it up. But for you, what do you expect from CBN tomorrow?
Okay, so I expect a rate cut. Yes.
At what, 26?
No.
27.50?
No, so I'm looking at it 25 to 50 bips.
That's great. Yes. Because a lot of people didn't look at 25. A lot of people were like 26.50 or 26.
Yeah. That's also possible. I mean, if not because of the season that we're in November, December, I would have said 100 to 200 bips.
That's deadly. Yes. That is interesting.
Yes.
But many people will see that a bit of risky. But let's leave it like that. Thank you so much, Noye, for coming on the show.
Thank you so much.
I've been speaking with Chinonyerem Obunma from Alpha10 Investment Limited here in Abuja, giving us perspective on what will really happen tomorrow. And for Noye, 25, 50. Interesting. For me on this platform, I'll wait till 2 o'clock tomorrow to hear what CBN will do. But for me and my crew here, I want to say thank you for staying tuned to watching the market report on CBN television. We have come to the end of today's show. My name is Adefolami Olamilekan. We will come here with another exciting edition of the market report show. Stay out of trouble, but stay tuned to ADBN so that you can hear firsthand the breaking news on CBN MPC rate for fourth quarter 2025. Bye for now.